Q&A. To ask questions, please write it down on the chat channel. This video will be available on KASB's website, kasb.com, and you can also download our app, ktrade.pk, to follow our research. We will be talking about Dr. Mark Mobius's recent book, Invest for Good, which he has co-written with Carlos Hardenberg and Greg Kineski, his partners. So with that, Dr. Mobius, welcome back to Pakistan.
Thank you very much. Nice to be back, and thank you for those kind words.
It's a pleasure. And before I go into the Q&A, there's a message for you from your friend in Pakistan. NASB, you want to welcome him?
Oh, yes, yes.
Dr. Mobius, Dr. Mobius, what a great pleasure to see you still as young as I saw you 28 years back in Pakistan to welcome you at that time.
Thank you very much.
We are so honored and happy. Nice
Yes.
to meet you. And also we are looking forward to welcome you again in Pakistan sometime soon after this COVID issue is over. It's overdue now.
Thank you very much. I look forward to it.
Give us the honor to host you again.
Thank you.
So nice of you.
So with that, Dr. Mobius, I want to jump in. The first question is that you have seen many economic cycles and business cycles and economic crises. You have written about them in some of your earlier books, such as this one. How is this crisis different from those ones? And what are the lessons from the earlier ones?
Well, it's a very important question because we recently did a study of all the previous bear markets around the world, and we defined a bear market as a decline of 20% or more.
Oh, sorry. Can you hear me, Mark? 1 second. I think your screen has gone mute by mistake. 1 second. Unmute. Now it's okay. Hello.
Okay.
So Dr. Mobius, sorry about that.
Yeah, as I mentioned, the idea of these bear markets, of course, is quite common. Every country in the world with a stock market have had bear markets. And we recently did a study of bear markets around the world. And we looked at 8 countries, both emerging market countries and developed market countries. And we found that on the average, these bear markets last a little less than 2 years. Again, this is an average. You know, some of them lasted for less than 1 year. So others lasted for as long as 6 years. But the average was a little less than 2 years. And on the average, the decline was about a little less than 50%, about 40-something%, because again, some of them were only 21%, some of them were 80%. But generally speaking, the pattern is very, very similar. First of all, the decline is quite sudden. It happens rather quickly, but then the recovery, in other words, the bull market recovery lasts a lot longer. And this is something we're seeing right now. Now, the difference with this current situation is because of the worldwide reach of the internet. The communication system globally have become so efficient and so cheap. It's very, very easy for people to get news about what's happening in every corner of the world. And you're seeing that now, by the way, with the Black Lives Matter demonstrations that are taking place around the world. Again, this is because of the communications revolution. So the difference this time is that this decline was a lot more sudden, very, very rapid. And the recovery will be equally rapid. A lot of people ask me, is this going to be a V-shaped or a W-shaped or a U-shaped or whatever recovery? And I'm telling them it's probably going to be V-shaped, and we've already seen recovery in most markets around the world coming up by 20, 30, 40, 50% from the bottom. So I would say this is the difference. But other than that, the psychology is the same. In other words, people become very fearful. They keep on feeding bad news into the system while the bull market is taking place. And I keep on reminding people that a bear market ends when the bull market begins. In other words, as soon as you have an increase of 10, 15, 20% from the bottom, you are now beginning a new bull market. And unfortunately, a lot of people think, well, the bear market lasts from the peak, the previous peak, to the next peak, and they say that's the length of a bear market. It isn't. The bear market ends at the bottom, and it's so important to remember that, because unless you start buying at the bottom, you're going to lose out. Because let's say you go from 100 to 1, let's say a 90% decline, but from 1 to 2 is 100% increase. So you've got to be able to go into the market at the absolute bottom and continue buying on the way up. I call it the so-called wall of worry that people have to climb in the bear market. Because even now you can see markets have come up by 20, 30, 40% from the bottom. And still, if you pick up a newspaper or you turn on the TV, you get all bad news, continuous bad news. Are we going to have a second wave of COVID-19? Is the US market going to continue going up, et cetera, et cetera? So the fears are still there and will not be over until you reach the next peak. And then people will say, hey, we're in a bull market, it's wonderful news, blah, blah, blah. But that time is too late to get in.
Wow, that was very wise, positive, and optimistic. And thank you for sharing that, which is much needed at this time, especially in Pakistan. Dr. Mobius, you have also been, in your recent interviews, you have been advising investors to keep at least 10% of their wealth in physical gold. And I know since the time you have been saying it, gold has performed really well. It's the best performing asset for this year. Do you still hold that view that even at these levels, 10% of wealth should be in physical gold?
Yes, I do. I think that gold should always be part of the portfolio. And the reason why I say that is particularly now, with the rise of more and more M1, M2, M3 money supply is moving up at a very rapid pace. As central banks around the world pour money into these economies, the money supply is really increasing at a rapid rate. In addition to that, the cryptocurrencies are rising. If you look at cryptocurrencies around the world, you'll see that they're quite prevalent and increasing. And nobody really knows how much is out there. So unless you have some gold, you're not going to really have any meaningful currency. You must remember that since the beginning of history, all currencies do not hold their value. The only thing that has held value has been gold. And I consider gold a form of currency. So it doesn't pay interest, it doesn't pay dividends, but it's a store of currency value.
Well, thank you for that historical perspective. And I suppose, you only get that with the kind of experience which you have. Moving on to your book, Dr. Mobius, you have written a lot about ESG, environmental, social, and governance. What are the key factors on which companies, especially the companies in Pakistan, can improve upon in order to make themselves more investable for an investor such as yourself?
I think one thing we've got to remember is that ESG, environmental, social, and governance factors, are now becoming much, much more important to investors around the world. People are very concerned about the social milieu of companies. What are companies doing in regards to the benefit to society, the social impact? They're looking at companies in terms of their environmental impact. Are they polluting the environment in any way? Are they taking measures to prevent environmental pollution? And the third and most important one in our view is governance. Corporate governance has to be improved around the world because there is an increasing need for companies to react to crises that come very suddenly. And of course, the current crisis is one good example where unless you have a strong governance, a good independent board of directors, for example, it'll be very difficult for you to adjust what's happening. But probably the most important thing is that companies that score high on ESG perform better. Their stock prices do better. And more importantly, we're finding that companies that have independent and diverse boards of directors do better. What do I mean by diverse? I mean people who are really independent of the company, both sexes, men and women, different cultural and ethnic backgrounds. Very, very important to have that on your board of directors, because that adds depth and knowledge to the company. So again, we're finding that companies with this independent, diverse background of boards tend to do better.
Thank you for that, Dr. Mobius. And you've written a lot about corporate governance in your book, and also in a recent blog of yours, you highlighted those. And you mentioned independent board directors and diverse board members in the board in terms of gender participation as well. What are some other factors on the governance side which are important? Because I think these are easy fixes, or perhaps important fixes for companies in Pakistan.
Yes, what we are focusing more and more on when we invest in companies is to encourage companies to be more transparent. By that, I mean, let's say they're having an annual meeting. Why not have a video recording of the meeting that you can distribute it on your blog site? Or if you're having some event, again, put it on YouTube or some other media like that where people can see what is happening. So transparency is very, very important. And we're encouraging companies to do more and more of that, because it's really interesting. There are many companies that are doing a terrific job in ESG, but nobody knows. Nobody knows what they're doing. So unless you publicize and let people know what you're doing, you're losing out. It's very important.
Well, thank you for highlighting that. That's a great message. Dr. Mobius, in the case of Pakistan, as you know, that our index is heavy on sectors such as oil and gas and cement. Now, a priori, people generally think that these sectors might not be even suitable for ESG. But I thought it was very interesting that in your book, you give an example of where you and I think Carlos, you visited an oil and gas company in Africa. So can you tell us how, because I thought that these sectors would not fit ESG, but how can companies in these sectors make themselves ESG compliant?
Oh, that's a very, very important question, because as you know, industrial companies have the biggest challenge when it comes to environmental standards. We've seen many examples of where companies have changed their stance and their behavior to try to improve what's happening on the environmental side, because a lot of the processes that they have are not environmentally friendly. So for example, let me give you an example. A company that's making paper. We have one example in China where this company imports waste cardboard from America and converts that into new brown paper, wrapping paper. And we visited the plant where this was being done. By the way, run by a woman. But anyway, looking at the plant to begin with, it was very, very clean. You could practically eat off the floor. It was so clean. That's number one. Number two is what they did is when they were dismantling all this waste paper, of course, a lot of waste products, a lot of wire, other pieces of wood, and so forth and so on. And what they were doing was using this material to make chairs using an epoxy. So they were using the waste for some beneficial purpose. The third thing they were doing was to ensure that, as you know, paper production is very polluting in terms of the water use. What they were doing was treating the water that they were using in the process so that when it was finished, they could put that into the stream. They had a stream nearby, clean water back into the stream. So these are the kinds of things that they were doing, which showed that they were very environmentally friendly and were proving their belief in doing things properly in terms of the environment. So there's a lot that can be done with cement companies would be another example, the type of feeder fuel that they use. That would be one way of doing it. In terms of other industrial processes like food processing, a lot can be done to save the waste and use it for other purposes. So a lot, in many directions, you're seeing some improvements.
Thank you. So that's interesting, and thank you for that example. That so the companies have to do a conscious effort in order to improve on ESG, and also, as you said earlier, they have to communicate it better because they might be doing a lot, but there's no point if it's not coming across to investors. Mark, you mentioned China. Now, US-China tension is a hot topic right now,
Yes.
and it's very close to Pakistan because, as you know, geopolitically, we are close to both the countries. How serious do you think this problem is, and how should both the government and companies in Pakistan position themselves to deal with this?
It's a really a big issue, and I think the best advice I could give to Pakistan is try to straddle both sides. In other words, yes, we know that there are very good relations between Pakistan and China, and it's for the benefit of Pakistan because China is doing an incredible job in helping Pakistan build infrastructure, etc. So it goes without saying. You want to improve that relationship. But on the other side, the US side, you can also improve by working with the Americans on trade. In other words, try to develop a good trade relationship with the US and also welcome US investments in Pakistan. So, it's not a yes or no situation. It's not white or black. It's a situation where Pakistan, being neutral, can do a lot towards having benefits from both China and the US. So that's what I would advise. In other words, not necessarily take sides on any disputes, but try to establish better relationships on both sides. That's very important.
Well, thank you for that, and I'll just highlight for the audience that you also spoke. I heard your interview recently on Bloomberg, where you were saying that there will be a shift of manufacturing out of China, and that supply chain dislocation or movement, countries will benefit out of it, and perhaps that could be an opportunity as well for companies in Pakistan.
Yes, I think one of the things to remember is that world trade is not going away. World trade will continue and will continue to grow. There's no question about that, despite any protectionist policies. Because if you take the example of the US imports are not going to decline. They will continue to grow, but they'll come from different countries. And the same thing with exports. Now, the advantage of this current situation is that as China transfers from a manufacturing-oriented economy towards a consumption economy and towards a more high-tech area rather than a low-tech, in other words, high labor content manufacturing, there are going to be opportunities for countries like Pakistan. You must remember, many Chinese companies realize this situation. First of all, their labor rates are going up too fast, and they've got to find other places where labor rates are lower. And secondly, they've got to find places from which they can export to the US. So we've seen a number of Chinese companies establish factories in other parts of the world, whether it be in Bangladesh or in Turkey or wherever. Vietnam is probably a good example of that, where they can get a lower cost manufacturing and export to the US. So it's not entirely negative to China, by the way, because these companies are still going to be making good profits, but they'll be making it in other parts of the world. And it'll be a good advantage to a lot of countries like Pakistan. So I would advise Pakistan try to encourage companies to come in to manufacture in Pakistan.
Thank you for that. Mark, a lot of this call is being joined by regulators from SECP, State Bank, as well as from PSX. What will be your advice to them on how can they help companies in Pakistan improve on ESG in general and corporate governance in particular?
Well, the first thing they can do is when they're evaluating new loans, look at the ESG factors in the companies. More and more, you're seeing that around the world where banks say, wait a minute, you guys are polluting the environment. This is a risk. You must remember this whole issue of ESG is not new. This is something that we've been looking at for the last 30, 40 years, investing in emerging markets, because very often we would ask the question, hey, wait a minute, we're going to invest in this mining company and they've got a real problem with their tailings. The tailings are polluting the environment. So we had to take that into consideration. Now, of course, with ESG, it's more formalized, but it's still there. And banks have to take that into consideration when they give loans, because the loans may not be able to be paid back if a company gets into trouble on the environmental side.
Thank you. And Mark, question which is very close to me, especially because many on this, there are students in this call, and this is being live webcasted in universities in Pakistan. And generations of people have followed finance and being inspired from you. And I think yesterday you also wrote something on your blog about it. What will be your advice for students who want to pursue a career in financial markets? How can they be good fund managers?
Well, the first thing they've got to do is look at themselves and find out within themselves their love of learning. Because as a fund manager, you have to love learning new things and keeping an open mind, being very humble when it comes to accepting new ideas and new concepts. So that's the first thing they've got to look at. They look at themselves and really determine whether they're going to be willing to take that attitude. The second thing I would advise is pick up a few books on forensic accounting, because one of the biggest challenges that we have is we get annual reports put out by auditors and by companies, but sometimes there are hidden secrets in these reports that we have to really dig out. And forensic accounting is one way of doing that. So I would say that's another thing I would advise students to look at. But the most important thing is keeping an open mind and being willing to constantly learn. I'm learning every single day new things.
Thank you. That's an amazing lesson, especially the importance of learning. And thank you for also bringing forensic accounting. One of my favorite books is Fooling some of the people all of the time, and you're totally right on that. I've been a CFO of a listed company, so I totally understand that how important that is. There are questions which are already coming in from people. We have more than 160 people dialing in on the webinar. Before I jump into it, I'll still be greedy and ask you a question first. Mark, you have been a proponent, and you are a proponent of ESG and good governance. How do factors and incidents such as the protest in China or the minority rights violation in India, how do that impact your investment framework and decision making?
Oh, it's a very, very important point for us. When we go to look at a company, after we've gone through the balance sheet, the profit and loss statement, the industry, etc., then we zero in on the governance. We talk to the management and we ask them, what are you doing with independent directors and so forth and so on. We ask a number of questions. And we try to convince the company to change if there's some problems in their governance, to adopt new measures to improve governance. If we find there is no appetite for that, then we don't invest because we don't think it's a good idea to invest in companies who are not willing to improve their governance. So it's a very, very important part of our investment process.
Thank you for that, Mark. Going to the questions, there are a lot of them, so I'll just choose some of them. The first question is from Dr. Salman Ahmed. He's the CIO of Lombard ODA in the UK. And his question is that, are you looking at the narrative of debt relief? And this narrative of debt relief from a country perspective, is that something which concerns you as an investor?
Of course, yeah. Debt relief for some of these countries is very, very salient. It's a big issue right now, as you can imagine. But what I'm trying to propose is that this debt relief comes with some very strong strings, or maybe I should say ropes attached, and that is reform. So if you take, for example, South Africa, before COVID, South Africa was downgraded by Moody's to junk status. Reason why is that a number of state-owned enterprises like South African Airlines, like the big utility company, Eskom, were corrupted, were not efficient, were overstaffed, et cetera, and they were losing money and a big drain on the budget of the South African government. So now South Africa wants to get help from multilateral institutions. What should happen is that the multilateral institutions should say, look, you want our help, you've got to help yourselves first by getting rid of these two state-owned enterprises, privatizing, telling them whatever is required to make sure they are reformed and are making money. There's no reason why a country like South Africa should have blackouts or brownouts. It's incredible. But yet that's been happening. So there has to be conditionality. And I know that's a dirty word for many people, the conditionality, they don't like it. And I noticed that President Ramaphosa recently made a statement. He said, my political colleagues are quite concerned about the conditions that the World Bank and the IMF are putting on these loans. But that's the reality. It has to be done. Because if it's done, then these countries can really improve and do better going forward. And they won't have to be in debt in the future. So I think that's a very, very important point right now, particularly at this time.
Well, thank you. So link the debt relief with some kind of reforms. On the similar topic of debt, there's a question from Mohammed Shoaib, the CEO of the largest asset management company in Pakistan, who was actually there in '92 when you visited. His question is that balance sheet of central banks have increased a lot. When will deleveraging occur, and how will that process of deleveraging impact the financial markets? And the second question is that Pakistan has a very small number of investable stocks. Do you think, how can somebody implement ESG approach in a smaller market like Pakistan?
Well, the ESG approach can be implemented in any market. It doesn't make any difference whether it's small or large. But I think you made a very good point, and that is there's not enough companies listed in Pakistan to reflect the incredible diversity of your economy. And I think two things have to be done. One, the government has to privatize more and more companies. I know that's a dirty word. A lot of people say, no, we're not going to sell the crown jewels of the company, of the country, et cetera, et cetera. But this is the only way to get transparency. And by the way, a government doesn't have to sell everything. They can sell 10%, 15%, because what it does, it improves transparency because a listed company has to reveal what they're doing, and B, it gives an opportunity for investors, local investors as well as foreign investors, to invest in the country. So I think that's going to be very, very important going forward for these countries around the world to list, maybe I shouldn't use the word privatize, but at least list their government companies on the local stock exchanges. Sorry, I think I've lost you. Hello, are you still there?
Sorry about that. Technology. I think we had too many people on the call. I was on mute, and I think now you are on mute. Eamon, you'll have to unmute Dr. Mobius as well.
Yeah, okay. Can you hear me now?
Sorry, yes.
Okay.
Now I can. So sorry about that. Dr. Mobius, there's a question from Mohammed from SoftBank in the UK. And he's asking, how do you rate the relative performance for emerging markets compared to the developed countries in terms of the outlook going forward?
Well, if you look at the recovery of emerging markets around the world, you can look at almost every market, and they're up by 20, 30, 40%. So the performance has been on par, and in fact, in many cases, better than the developed countries. If you look at the US market, for example, you'll see a number of emerging markets have done a lot better in this recovery. So that's a wonderful thing about the emerging markets, that they're more volatile. They go down more, but they come up more. So if you're willing to come in at the bottom, you can do very, very well.
Thank you for that. There's another question from Kaisa Naseem, who was at IFC. He says that you visited the Central Asian countries in the 90s. Since then, those markets have not opened at the pace which people expected them to open. But now countries like Uzbekistan have announced massive capital market reforms programs. Are you looking at those markets, and what's your opinion on countries such as Uzbekistan?
Oh, yes, we definitely are looking at these countries. But you must remember the key factor for us at the end of the day, in addition to all the other factors we just talked about, ESG, performance, etc., is liquidity. We're running open-ended funds, so we need to have liquidity. I would say at least $1 million per day turnover of a company. Otherwise, we can have real problems if our clients want their money back. We have to liquidate, and we have to be able to do so easily. So we use that as sort of a benchmark of liquidity. And as you know, many of these countries and companies don't have that kind of liquidity, which is a problem.
Thank you. And what about, do you have any sector preferences? Do you think cyclicals will do better, or post-COVID world, do you have any sectoral preferences as well?
Yes, obviously health is one sector. I mean, we're looking at hospital companies, pharmaceuticals, medicine delivery services, clinics. We have a company in Brazil, for example, that does testing and examination, that sort of thing. So health would be one area which is going to be growing as a result, not only because of COVID, but because of the general aging of populations around the world. The second area is anything to do with technology, and that could be anywhere from manufacturing of technological products all the way up to software engineering and so forth. One of the things that we're seeing, of course, globally is the increasing impact of the internet on almost every business in the world. So what we do now is look at companies. They may be traditional companies, let's say a retail chain. Then we look at them to find out what are they doing on internet? How much is their internet sales growing? What kind of resources they have in that direction? So I would say that's another area that would be of interest to us. And then the other area would be consumer, anything to do with the consumer, because per capita incomes are moving up, and we want to capture some of that growth in the consumer market, whether it be services, whether it be retail, whatever. That would be an area.
I'm getting overwhelmed by the number of questions. So there's another question from a large corporation in Pakistan, Daud Hercules Engaro, and their question is that, do you think that having greater participation of overseas investors as shareholders in local companies in Pakistan could help those companies understand the significance of factors, ESG factors, and present their case better?
Definitely. I mean, you'll see that more and more of the big institutional investors are demanding good ESG scores of the companies in which they invest. One very good example, by the way, is the Norwegian fund, the sovereign fund of Norway, which is, I think, the largest in the world. And they made all their money from petroleum, as you can imagine, and they're not investing in oil companies. So this is an example where they're saying, look, we want to invest in companies that are not polluting. We want companies with high ESG ratings, et cetera, et cetera. So I think any company in Pakistan that is getting foreign investors will come up against this requirement. The big institutional investors, whether they be pension funds or family offices, et cetera, will want to have a good ESG and will look at the score of the company.
Dr. Mobius, there's a question from Ali Sultan, Registrar of Bank Alfala in Pakistan. He was also there in '92 when you came and visited. His question is that Pakistan has opened up its domestic bond market for global investors in the local currency bond market. A, have you looked at that market? And B, what's your opinion on those flows? Because there's a debate in Pakistan that those are that's hot money and maybe it might not be appropriate.
No, I think creating a local bond market is essential. It's very, very important. And I'm so happy to hear that more and more emphasis is being put on that in Pakistan, simply because this is a way to raise domestic capital. It's much better to have a local currency bond rather than a foreign currency bond. As you know, many companies and countries have gotten into big trouble by having US dollar or euro bonds because their local currency may be depreciating against the foreign currency. So I think it's very important to have a local bond market. And by the way, we of course are focusing only on equities. But personally, I invest in bond funds that invest in local currency bonds, because very often, even accounting for currency depreciation, many of these local currency bonds perform better than US dollar denominated bonds. So yes, I think it's a very good idea.
Well, thank you. It's great to have your opinion on this very heated topic of discussion in Pakistan. There's another question, which I suppose is the easy question. I can answer it on your behalf, but because I know your views on it. And that's, what's your outlook on the oil market over the next 2 to 3 years? And I'll just add that you have been, you gave a very great call on oil even when it was going down, and you said that it will rebound, and since then it has. But we'd love to hear from you on what's your view on oil.
Well, it's interesting because we have an alumni group that we communicate, and was it 2 months ago we were talking about oil, and I told them, I think oil is going to go back to 40, and they said, well, why don't you put your money where your mouth is? And so personally, I invested in a oil futures fund, and it's done okay. I mean, because the oil prices have moved up. So I believe that oil prices will probably continue to rise, simply because as the COVID-19 downturn expires and as people get back to work, just think about where is most of the oil used? It's used in transportation, whether it be gasoline, diesel, fuel for aircraft, etc. And these are going to be coming back in force. So the demand for oil will increase going forward, and I believe the price, therefore, will follow that trend.
Thank you. And another question, and I know you have already answered partially this in your earlier question on gold, but the question is that the balance sheet of central banks have taken a lot of debt, and most countries have announced large fiscal spending packages. How would you see that impacting the markets going forward, especially when the deleveraging starts?
Well, the good news is that all this money is coming into these markets, and that's driving stock prices, because if you have a lot of money chasing fewer and fewer stocks, then you're going to get a rise in prices. Now, the next question, a lot of people say, well, there's a we're going to have to atone, we're going to have to pay for this incredible debt? And the answer is no, not necessarily, because as the debt is paid, these companies are already recovering. So if a company is recovering and making money, they're going to be able to pay these debts. If they can't pay and they default, two things will happen. One, if they're too big to fail, the central banks will come in and help them. If they do fail, then they'll just be merged with other companies. See, the situation that you have globally is you have fiat currencies that governments can keep on printing. So there's no reason for anyone to default if the government is continuing to print and give out money and lend money to these companies. Now, of course, as an equity investor, we've got to be careful because some companies will go bankrupt, and we got to make sure we're not exposed to these bankrupt companies. But otherwise, from a global macro perspective, I don't think this presents any big problem.
Thank you for that. Dr. Mobius, there are a few interrelated questions, and I'm combining them. And in my view, for example, I think your genius is in spotting the trade dynamics between countries. You wrote a book about trading with China back in the 70s. Do you think that blockchain and cryptocurrencies can be used for settling trades? And what's your overall opinion on crypto space in general, but Bitcoin in particular?
By the way, thank you for those nice comments, but I must say my predictions have not been very good, because if you look back to that book, Trading with China, I remember we made a projection of what the trade with China would be going forward. And at that time, a lot of people say, you're crazy. There's no way that China will have such trade, because we had a straight line projection going up. Well, it turned out we were way under what actually happens. We completely underestimated the incredible growth in trade with China. Anyway, if you look at cryptocurrencies, first of all, cryptocurrencies are already being used for trade. Now, a lot of the trade is illicit, illegal trade, but it's still trade. It's still being used to trade drugs, to trade whatever. A lot of people want to hide what they're doing, and one way to do that is with cryptocurrencies. Going forward, there are proposals for cryptocurrencies to become a sort of global, to create a global currency, cryptocurrency that all countries would recognize with their central banks. You must remember that there's a thing called SDR, special drawing rights, that central banks are already using, which is, again, a fiat currency. So given the fact that cryptocurrencies are fiat currencies in essence, there's no reason why they can't be replaced. The big barrier, of course, is being accepted by countries around the world, because countries like to guard their currencies and they like to control their currencies very closely, because they realize that this is a very powerful weapon they can use for creating employment, for helping companies, et cetera, et cetera.
Staying on that topic of currencies, there's a question from a bank, from Faisal Funds, that what's your outlook on Asian currencies? Because we've seen a lot of volatility in Pakistani rupee, and in fact, most Asian currencies against the dollar.
Oh, you're interesting. If you go back into history, you find that the trend has been towards less and less volatility. Let's talk Brazil, for example. I remember being in Brazil when inflation was at 2,000%. And I remember arriving at Rio Airport, and I met my Brazilian friends. I said, 2,000%. And they said, yes, isn't it wonderful? I said, what do you mean? He said, well, last week it was 3,000%. So the currencies, they were changing currencies. I think in that time, within the 5 or 6 years, they had 4 or 5 different currencies. They kept on creating different currencies. So this idea of volatility has come down substantially. And one of the reasons why is during the Asian financial crisis, companies, not only in Asia, but around the world, realized that their efforts to control their currencies was a big mistake. As you know, Thailand, where the crisis started, used up all their foreign exchange reserves to protect the Thai baht. I think it was 20 baht to $1. It went to 40 or 50. And of course, they had no more foreign exchange reserves. And of course, the thing went through the roof. So they then realized that it's not a good idea to try to protect your currency. Let your currency ride with the market. Of course, you can even out some of the spikes, but generally speaking, open up your foreign exchange market. And I think most countries have done that. And it's meant that the volatility is not as great as before.
Thank you for that wonderful answer and for that historical perspective, because I think that's what most of us lack, and you know, that's the genius of a person like you who can put things in perspective, and that's a very optimistic message as well. There's another question. Moving to another question, you spoke earlier about manufacturing shift away from China to other countries, and you gave the example of Vietnam and Turkey, where manufacturing is moving from China to these countries. We haven't seen a lot of that happening in Pakistan. Do you know what are those countries doing right, which we can copy in Pakistan? Where are we getting it wrong?
Yeah, the first thing that Vietnam did right was to change the rules and regulations to allow companies to come in and do, how can I say, sort of free trade. In other words, they could allow companies to import raw materials and export without duties. So that's very important. It's they call free trade processing zones. And that's something that I think Pakistan is working on that. I don't know whether you have that already, but that's very important, because what you've got to do is allow a company like a Chinese company to come in and say, look, you're manufacturing garments, you can import the textiles, you can import the thread free of charge, and then you can export. This is the only way you're going to attract a company. So that's one thing. The second thing is to look at the labor regulations. This is one of the problems that India faces now, because the regulations are so complex and difficult for foreign companies to adhere to. That creates a problem that they don't want to hire people if they can't fire them. This is a problem. And one of the reasons why, for example, Hong Kong was an incredible success story, and I know that from my own personal experience, is that you could start a company in 2 days. You could hire people, you could fire people with no interference from anybody. And so therefore you could really create a very entrepreneurial spirit. So I think that's very important.
Thank you for that. So regulation is really critical for making it easy for companies to come and set up and do business. And I suppose that's where Pakistan has been lacking, although there are plans and there have been effort, but I suppose they have not been as fast in implementing those as other countries have. Moving to another question.
By the way, on that topic, I think it's very important for the Pakistan authorities to tour Vietnam, to go to Taiwan, go to Hong Kong, go to Singapore, ask them what they have done to encourage foreign investment, and to learn a lot about how this can be done successfully.
Thank you for that. You're totally right. Learning from their experiences is extremely important. Yeah. Thank you for bringing it up. And regulatory authorities are watching this, so I suppose that's a point. And then on a personal note, on this point of actually touring, a long time ago, I think I read a blog of yours where you had written about your journey from Singapore to Malacca on a bus. And a couple of years ago, when I was in Singapore, I copied your route, and I took that inspired from you. So I just thought I'll bring it up. There's a question: what's your outlook on inflation for the next 2 to 3 years? Because that has been a concern for investors, that so much money printing might lead to inflation.
Well, you just opened up an opportunity an opportunity for me to plug my new book. I have a new book called The Inflation Myth, in which I say there is no inflation. There is only devaluation of currencies. So in the book, I point out a few things. First of all, the way inflation is measured is very inaccurate. Why? Because what they do is they take a basket of currency of products, right? Let's say 1990, this is the typical basket of products that households buy. Then in 1995, they change the basket. They add things, they subtract things. And then in 2000, they do it again. So you're comparing apples and oranges. You're not comparing the same things. So first of all, the inflation measurement is wrong. Number two, the quality of goods and services is changing by the minute. So that the quality of an automobile in 1990 is different from the quality of an automobile in 2000. So again, you're comparing apples and oranges. And with technology, we're seeing the cost of goods and services going down. For example, we're now on this Zoom podcast. How much is this costing us? It's a fraction. It's maybe nothing or a fraction of what it would cost 10 years ago or 20 years ago. I remember in the days when telephone calling was extremely expensive. A call like this would probably cost a few $1,000s. Mm-hmm. So this is an example of where technology is making things cheaper and cheaper. So in my book, I try to point out we are not in an inflationary world. We are in a deflationary world. And we've got to get used to this idea because central banks keep on talking about inflation, inflation, inflation. But in fact, the impact is not there. And finally, if you look at wages and inflation as measured by governments, you'll see that wages are going up faster than inflation in various countries around the world. I think you could probably take any country. I'm not talking in 1 year, but I'm talking about a 5 or 10 year period. If you measure how much average people are making, the increase and the average increase in the so-called inflation statistics, there's no comparison there. The wages are going up faster. So that's why I think people have got to be very careful. Now, one of the reasons why we love equities is because equities will adjust to the devaluation of the currency. Mm-hmm. And so companies will constantly be able to increase their prices in line with the deflation, with the devaluation of the currency.
Thank you so much. We look forward to your new book, and I already have two with me. So I look forward to getting the third book, and of course you've written a lot more. Inflation is a myth, and I think that's a very interesting point, especially in the context of Pakistan, because we have always been very worried about inflation. But you're spot on that what we have seen in Pakistan as well, that inflation has been caused mostly by exchange rate depreciation. So it was more the currency devaluation rather than inflation rising because of wage expectations and inflationary expectations. There are a lot of other questions as well, but I think we have already answered most of them. There's a long question about students, and I'll advise people to look at the recording because you gave very good advice for students on how can they prepare for a career in finance, and you mentioned curiosity and love of the subject. Dr. Mobius, I can talk a lot.
By the way, in relationship to that question, I think it's very important for any student to think about, don't think about making money, number one. Think about what you love to do. Too many times people are pushed into roles in our field as well with the idea, oh, I'm going to become rich, I'm going to become a millionaire, and that's my objective. But they don't realize that they may not be very happy doing this. So they've got to consider what they are really happy doing. If they can pick a vocation where they are happy, chances are they're going to make money. And that's the reality.
No, thank you. Happiness is important, and the love of doing what you are is certainly important. I think the final question from our side, there's a question about the Pakistani market lacks depth. And so the question is that how to tackle this issue in terms of increasing retail participation. And I think you have answered this in terms of the privatization and reforms. And you have been a big anchor and supporter of Pakistan's privatization program. So what's your comment on that? How can countries like Pakistan improve the depth of the stock market?
Yeah, I think one of the most important ways of doing this is giving listed companies some benefit on the tax side. Because, if you're an entrepreneur in Pakistan or in any country around the world, and you say, now, wait a minute, if I'm listed, I'm going to have to reveal everything about my company. Why should I do that? Unless I need the money really badly. But even if I need the money badly, better I go to the bank, I can keep things quiet. So you've got to give some benefit to people that are listing their companies. And that means giving them a tax reduction. So you say all these companies that are listed, you have a lower tax. And of course, you must remember every country around the world, regardless of where you are, US, Europe, whatever, a lot of companies like to reduce their taxes and they cheat on taxes. So the benefit of going listed means an immediate increase in taxes because the government will know what they're making. So I think you're going to have to have some legislation which reduces the taxes for listed companies.
Thank you. I'll sneak in one question for the last 3 minutes we have. Is that it's a question from Terra Nova Capital, that during the pandemic, have you seen any correlation between companies' ESG efforts and how their stocks are performing during the pandemic?
Oh, definitely. I mean, we've seen more and more evidence in that regard. In fact, I was just looking at a program just the other day, which showed particularly on the corporate governance side, how improved the performance has been. In my book, you'll see some examples of this as well.
Thank you so much, Dr. Mobius, for your time. This was extremely insightful. And as we said earlier, we would look forward to welcoming you in Pakistan physically as well. It's the generations of people have been inspired by you, and your webinar brought a lot of happiness for people in the capital markets. So thank you for that, and thank you for your answers.
Thank you, everybody. Bye-bye now.
Bye-bye.